Hello and welcome to the How2Exit Podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. And now a moment for our sponsors. I want to highly recommend you get Acquisition Aficionado magazine. Every month, Acquisition Aficionado magazine brings you tactics for business buying and selling you won't find anywhere else. Learn firsthand from industry leaders who share their success stories, featuring in-depth interviews and stories from leading figures in the business acquisition industry. This multi-platform mobile magazine speaks to acquisition entrepreneurs wherever they are in the journey. And I want you to visit acquisitionaficionado.com today. Hello and welcome to the How2Exit Podcast. Today I'm here with Landon Mance, and he is the co-founder of backboneplanning.com and acquisition entrepreneur and entrepreneurial all over himself. Thank you for being on the show today, Landon. Let's just go from there.
Thanks a lot. Really looking forward to the chat, man.
I always ask everybody their origin story, kind of their purposes, so the audience can kind of know who you are and who they're talking to. So the running joke is still, hey, you were born and then you ended up in a show about mergers and acquisitions. How did you end up on a show like this?
Yeah, good question. And, it's funny because I don't actually know the answer to that, because you said that your team has different methodologies where they track people down. So not sure where they found me, but probably a podcast or a podcast interview or some kind of social media posting or something. So, or I was just riding the coattails of somebody much smarter and more successful than me. And maybe that's how they found me.
These are my best shows because a lot of times if I've invited you, I know a lot about them. I have all these kind of pre-canned questions in my head because I know them. Sitting down with somebody new who's an entrepreneur, who's out there helping entrepreneurs and having an organic conversation is a little more fun than that, because there's nothing's pre-scripted here. Nothing's pre-planned. I've never sent you a list of questions I'm going to ask. This is just an exploration of who you are, what you do, and we'll see where it goes. Right. So were you an entrepreneur at early stages of your life, or when did you know you were an entrepreneur?
Well, so I come from a long line of entrepreneurs. Both my grandfathers.
Mm-hmm.
My dad has been essentially an independent commercial real estate developer for 50 plus years. And I was the kid that picked lemons off of our lemon trees and knocked on our neighbors' doors and sold them bags of lemons. I wish I could remember what I sold them for, but I imagine I probably sold like 20 to 50 lemons for $1 or something, Yeah. And then, that carried into high school. I had some entrepreneurial endeavors. We won't talk about those on the show, but I had some entrepreneurial endeavors in high school, and then led into my kind of day job, if you will, which is being like a wealth manager. And I started out in the independent space doing that. So no revenue, no clients, somewhat of a network, and just basically had to build from scratch. And for anybody that's listening and has any knowledge of that industry, when you start out in the independent space as a financial advisor, your chances of making it are about 10% or less, because 50 to 60% of people wash out in the first year, and then the remaining wash out in the first 3 to 5 years, and then 5 years plus. I think there's 5 to 10% of people that you started with are still in the industry.
Yeah, it's a tough industry. Imagine, especially you look young now. If this was years ago, you're a young guy going to people who are fairly seasoned in their career that have money to invest and saying, "Hey, trust me, this young guy," into putting your money in the right place and telling you what to do with your money. And you'll get a few cynical guys like me, and they go, "Cool, how much money you have and where do you got it stashed?" Right? Because that's the response a lot of these guys are going to have, and to be able to overcome that, win trust and rapport, and have people work with you says something about both your sales ability and your ability to succeed. Because if you failed those first few clients, they'll tell more people than the ones that you succeed for. So kudos on that. I see that you're wearing a Nevada Tree Service, shirt. Is that one of the businesses you're associated with?
Yeah. Yeah. So I'll give just a quick backstory as to how that came about. So in our wealth management firm, my partner Austin and I own Backbone Planning Partners, and that's my day job, if you will, kind of. And I'll elaborate on that later. But we pretty much exclusively work with entrepreneurs. So most of our clients are generally going to fall in like the $3 to $10 million a year of revenue space. We've got a handful that are like 10 to 50, but majority of our clients are $3 to $10 million a year in revenue. And after just a few years of working really closely with our, clients who are entrepreneurs and kind of diverting all my discretionary monies just into like basically the stock market, I was like, I'm gonna do something different. I'm gonna look for a small business to buy as an investment. And so that started in like 2020, a very informal search, if you will. It wasn't like I was like pounding the pavement, and looking at biz buy sell it was nothing like that. But fast forward to December of 2022, a, a tree trimming business in Las Vegas, where I live, came on the market, and I was really interested in it. And then it came off the market in probably 2 weeks. I'm like, oh, dang, I missed that opportunity. Oh, well, on to the next. And then it came back on the market about 4 to 6 weeks later because the deal fell through. And I emailed the broker who I know personally. You probably know him too. A guy named Trent Lee out in Las Vegas.
Yeah.
The guy sells like 100 businesses a year. I mean, something just an unbelievable amount. And I knew Trent personally. And so got in touch with him and was on a pickleball court, played pickleball with a buddy. I said, dude, I've been looking for a business to buy for the last like 2 years ish, and I need someone to operate it. Why don't we buy the business together and you can run it? And he's like, okay, let's do it. I've been looking for an out. He was like a mid-level manager for a big 1,000+ person corporation. And he always kind of had an entrepreneurial spirit. We actually started like a little landscaping thing when he was in late high school or early college. And so this would have been around January of 23. And then we ended up closing on the acquisition of Nevada Tree Service on June 1st of 2023. So we've got just a little bit over a year of operating it. And I'm really the finance strategy advisor type guy because he had no small business experience. And he's the general manager, runs the business soup to nuts day to day.
So that's interesting. Those tree services can be anything from, a few guys with ropes and rappelling gear and chainsaws to very heavy equipment laden, companies. Is this, where's it on the scale of things? Do they have the big boom trucks and everything else, or
Yeah. Yeah. We're kind of in this like, we're kind of in this like awkward, like pubescent stage where, we're not adolescent anymore, but we're not full blown adults. So there's two kinds of tree companies for the most part in Las Vegas. There's, Chuck in a trailer. It's owner operator with 2 or 3 crew guys. And maybe he's got like a chipper that he tows behind, maybe a pickup or, a little bit larger scale truck. And then there's the 10 plus crew companies that are $5 to $10 million a year, in sales. And we're like one of maybe 2 or 3 companies that are in this weird middle spot. So we're about, this calendar year we'll do maybe 1.2 million in sales. We've got 2 bucket trucks, a chipper truck, a couple chippers, a couple stump grinders, and then a couple passenger vehicles because we've got like a full-time sales guy. So the entire the entire team is 8, including my partner and general manager, Luke. So yeah, so we're kind of in this weird spot. We've got like the administrative office is where I'm sitting. We run both Backbone Planning Partners and Nevada Tree Service out of the same administrative office. And then we got a yard, which is a quarter to and a half acre. And that's where we store all of our vehicles and equipment.
Oh, that's cool. So I told you before we started recording, I live in the redwood forest, right? So I got to see. I wish I had more time to sit there and watch. I actually pulled over and watched for a little while them try to they took down a redwood tree here, and the redwood trees are 250, 300 feet. Right, and that was a spectacle to watch. I only watched probably I had somewhere to go, so I sat there probably an hour and watched them as they,
Mm,
used boom trucks to take them part of the way, then they actually manually climbed up that tree, and they started securing off throwing ropes down, and they were roping off sections of the tree because they took the whole tree down. Because I came by a day or so later, and it's down to the stump. But, yeah, it was in a bad location against, power lines and anyways, and
mm,
there's I don't know, maybe it was disease too, but they rarely take out redwood trees, so watch them do that. But you gotta seen the crew that they had. There was probably 10 or 15 people there. They were roping the thing off to other trees to try to, because it was right up against the road to control where chunks of that thing fell. There's some science to some of these, especially here with these big, big trees. So, what is the daily workload in Nevada for tree trimming service? Is it a lot of trimming back fronds on the big palm trees they plant everywhere, or what kind of work you do?
yep. Yeah. Definitely a very healthy amount of work, doing palms. The
Yeah.
palm work though, it's not very profitable work, not for like an organization like us. For
Mhm.
the truck and the trailer guy, palm work is great. I mean, you can make, $300 to $500 a day, easily in profit,
Mhm.
just a truck and a trailer doing palm work, so can be a great little gig. But for a little bit larger group like us, you can't survive just doing palm work.
Yeah.
You know, the
They're hell on equipment too, aren't they? Aren't those things extremely fibrous and chew up a chain on the chainsaw? So
Yeah,
I've
yep,
tried it
yep.
one out in Texas with on a piece of land we own a tiny, and they told me, "Oh, you can just rent a chainsaw and take that out if you want." It was a short type of palm, and that thing about
Mhm.
ate that rental chainsaw blade up. I had to replace the chain before I gave it back to him.
Yeah. It's funny. You would think that I would know a decent amount about tree trimming, because I
That's
own a
okay, though.
company, but I really don't at all. I still have never operated a chainsaw. I've never been up in the boom, but I've got a crew that does it very, very well. And we've got, most of the guys that we're working with have 10 to 20 years of experience in the tree business. And we let them do what they do, and they do A plus quality work.
That's actually a good thing to be able to say, though, because a lot of the acquisition entrepreneurs here think they have to be an expert in anything they buy, and the truth of the matter is you need to be an expert in what you're an expert in, whether it's for you finance or for the other guy operations or whatever, and be have the wherewithal and the knowledge to know you're not an expert in trees and what do they call tree specialist? Arborist. You're not a arborist, you don't know that tree's diseased or that, but you know where to call one, right? You know who on your team knows who, "Hey, yeah, that tree has to go, it's dying anyway." That said, a lot of the acquisition entrepreneurs listening here, they think that they have to stick in their lane, and it's not a bad idea to stick in your lane if you've got one, but, sometimes sticking in your lane is like, I know finances inside and out. Every company needs great finances, right? Let's go you acquired it. How's it going so far? How's the process of taking ownership of somebody else's business, making it your own? Has that went smoothly? Were there hiccups along the way?
Yeah. I mean, generally it has gone well. Has
Mhm.
there been hiccups along the way? Yeah, there's been many Mike Tyson gut punches along the way. There's no question about that, but nothing we couldn't handle. When we decided we were going to buy about a tree service, Luke, nor I had any experience at all. I mean, absolutely zero industry knowledge or experience in tree trimming and removal related services. One thing that I did know was that I knew what a fundamentally sound small business looked like because I kind of had one, and I also had a lot of clients that had them. So I thought I knew, what a fundamentally sound small business looked like, and it turned out I was right because it is a good business. At its core, it's a great little business. For the previous owners, it was a phenomenal business. I mean, they did $1 million and 600,000 hit the bottom line. I mean, it was unbelievable from that standpoint. Um, and you look at Nevada Tree Service, we've got close to 600 Google reviews, 4.9 average. Our next closest competitor, whose business might be 4 times the size of ours, but our next closest competitor is 150 to 200 reviews less than us. So they did a lot of things right. We've got a good, ERP system, that ERP slash CRM system that we use. We just continued along with that. A lot of stuff has been digitized. Not everything. We still get very fair amount of paper checks, in the mail, because a lot of our customers are older. And so they still send us checks, which is fine. But yeah, it was a great business. We knew that the team was good. And so we felt really strongly that like we just could acquire the business and just lean on the team to continue doing what they're doing and to teach us along the way. And that's more or less what's happened.
Is growth by acquisition on the table, or there's equal size or smaller competitors out there that you would like to acquire?
Yeah. Yeah. Very relevant question. So I put an LOI out last week on a competitor that just was coming out onto the market. In fact, I kind of got a look into it before it actually hit the market, just by 1 or 2 days, because the broker that sold me Nevada Tree is representing them. And so I put an offer in, and I got a response from the broker that basically, your offer just wasn't accepted. I'm like, Okay. Is there a counter? Do they want to have a discussion?" And he just said, "Well, apparently not, because they haven't responded to you." I'm like, "Okay." So there was two schools of thought when I put this offer. I was like, okay, one is I can put an offer in. It is quite a bit less than what they think the business is worth. They want 2.5 times on 170,000 of SDE, and
Pretty
the
small.
business is, yeah, it's a tiny, tiny business. And so I'm like, I could put an offer in, and I'm 99% sure that they're not going to accept it, but at least the seed has been planted. Or I can just not do that, and I can just let the market educate them, because it is, in my opinion, highly, highly unlikely that someone is going to come in and pay anywhere close to what they want for the business. They're asking 415,000 off of essentially 160, 170 SDE. I think the business is probably worth maybe 300, 350 grand, absolute maximum. And so they rejected it, which I knew they would. And so now I'm just going to let the market educate them for a few months. And I would be stunned if they did not come back to us in the next 1 to 3 months and say, "Hey, can we talk?" So my offer is actually good until a week from today at 5 p.m. So who knows? Maybe they'll come back to me next week and ask me if I want to discuss, but maybe no one else has put an offer on it. But it's only been, it's been 2 weeks. So to answer your question, very interested to grow through acquisition. This would be a great little target for us. They do about $500,000 a year in sales. And so it would increase our business by 40 to 50%. And their clientele is very similar. So a lot of synergies, like we can pick them up, and we can just plop them right in and just hit the
Right?
ground running, almost on day one. So, but uh, very often tree companies are coming on the market out here.
Yeah. Can't imagine there's a bunch of them, right? But I'll probably share something with you already know. It's human nature. But, I would suggest, and just because of human nature, I would suggest in, say, 3 to 4 weeks or 5 to whatever you think's logical, when you think they should be starting to think about you again. Probably send out a message, and I usually call it a forget me not message, and it's an old story about the forget me not flower. But I've actually made clients, and when I was a marketing coach, I've had, 6 high 6 figures and 7 figures with a single letter. and it's where we reach out to all the customers that have gone away and said, "Hey, bygones be bygones, no hard feelings. If you'd like to chat with me again, I'm still interested." So if you take that ego out of the way where they've told you no, and now they're afraid that they've offended you, a lot of times human psychology won't let them call you back, right? It's
Mhm.
almost on you after a few weeks to go, "Hey, I'm still interested if you are," right? And
Yeah.
there's something to be said for that because a lot of times people just were like, "Man, I wish that guy was still on the table, but I ticked him off. I'm not gonna call him." And, they don't they're just it's the man's search for meaning. They're adding thoughts and the whole logical they're telling a story in their head that's not even true. You never had those emotions that they're fearful of.
Yeah. Yeah. It's so interesting operating in this kind of the Main Street, market,
Mhm.
because as a uh, somewhat, professional investor, I send them an email and I'm like, okay, like let's see what they come back with, like expecting them to want to like negotiate if they don't like the offer, and it
Right.
was just, it was
Yeah.
just no, that's just no. I'm like, all right, well, we'll talk again later.
So, did on that one, was it SBA finance? Did you guys self-finance it through other investments? Did you raise capital to buy it?
Yeah, so contrary to the stuff that you and I see and hear every single day, which is buy a business, try to buy a business with no money down, or you only need to put 10% down for SBA, financing. Um, that's just not my style. I don't subscribe to that really at all because I know what the aftermath can look like. And I also know from talking with a boatload of acquisition entrepreneurs in the last 3 to 12 months that's what they all did. And the woes and the challenges that they have with cash flow are very, very real. So we bought the business for 1,650,000, and we put 550,000 of equity in, and then we financed the remaining. So I think we financed, so the total project cost was 1.8, $50,000 of closing costs, and then $100,000 of working capital that we put in on day one. So we put in 550,000 of equity and financed just under 1.2, I believe.
And
Yeah,
then, that's cool. Did you guys finance it through SBA or traditional financing?
SBA.
Okay, cool.
Yeah.
And
Oh,
what
yeah.
was
Our rate is 11 and a quarter percent.
wow.
So our principal and interest payment is about $16,500 a month.
That said, a lot of businesses are cyclical and they don't get or they have cash flow cycles throughout the year. And if you take on this debt ratios, you don't realize that you might be on the high cycle when you're looking at it and you're paying attention like, oh yeah, this company makes enough money to cover that mortgage that payment. And then you get to the slow part of the year and you don't realize that you're a lot leaner than you thought you were, right? That there's going to be certain months out of the year where it's going to be tough to make payroll, salary, and pay the loan payments. So people need to really take a look at that and understand not only just what the balance sheet and all that stuff says, but take a look at your cash flow and your yearly cycle of how money goes in and out of that business, and then look what debt coverage is going to do. And there's something to be said that a business that's been running great for years and years that has been debt free is slightly different than running something where you just leverage debt against it and you have a mortgage basically to pay every single month because, that's some pressure in itself. And some businesses do really well and raise up to the pressure, and some businesses it causes enough stress that it distracts from other areas where the owners could be paying attention to.
Yeah, no doubt about it. It's really interesting because I have a perspective that nobody else has, and that is the fact that I own a wealth management firm that serves, you know, 15 to 20 very successful entrepreneurs and their families. And so we get the inside look at how business is really going.
Hmm.
And that might not be the same message that's portrayed on social media because they look like they're this real big successful person and they're talking on stages and they're doing this. And behind the scenes, I'm sitting there tight lipped going, dude, I know that your cash flow statement last month, like you were negative. Like you had more money going out than came in. And guess what? Like the month before, like you barely broke even and you're in a really bad spot right now. And so I have a really interesting perspective because I get to see the up to date financials for, call it 20, successful small businesses. And then I also get to see the messages that are portrayed that people really think that this is this uber successful small business. And I'm sitting there just quiet going, gosh, if you only knew, if you only knew.
Yeah, a lot of people don't realize that. I'll give you anything that does retail. 80% of some of these, I looked at a company, I guess it was 2 years ago now, a long time ago. 80% of their business, 80% of their business was done between um, Black Friday after Thanksgiving and Christmas. Right? It was a gift. The product was primarily bought and sold as gifts and given to other people. Try to sell me the business in January, February, and try to say, "Well, we're not gonna leave," they didn't wanna they weren't looking to leave anything in operating capital and stuff, so I think, "Okay, I have to put that back in there. Oh, it's fine." Like, "No, you're not gonna make any money to pay all these employees until Thanksgiving." So and there's stuff to be done. There are some sales that trickle out throughout the year, but to be honest, if you took out the November to December timeframe, they were insolvent. Like, they couldn't pay their bills throughout the year, including, the level of staff now and they increased their staff during that year. They had temporary help that would come in, but they couldn't even pay their main crew if it wasn't for money they saved during that period of time, and they didn't see it, but it was because they've never looked at they just made it through the first couple years, and they did really good about retaining a lot of cash in the company, so it never bothered them that there are a lot of months throughout the years, at least, like, when I looked at their month-to-month cash flows, there was at least 3 or 4 months out of the year in all 3 previous years where they were negative in those months, right? And it was, "Oh, because we bought this or we did that." Like, "No, I took that stuff out. You were negative after you paid your overhead expense, your rent, your, power, utilities, and your employees and your, all the stuff you pay, excluding any major capital expenses." Like, you were still negative, and they didn't get that. So, if you strap debt on top of that, now I'll say I bought that with a loan, 11%, carrying something at 11% on $1,000,000, an extra $16,000 a month, for instance, say it was the same size, that would be detrimental to that company if you didn't previously know and have retained the cash, or either you get there's this thing I really detest, and that's owner contributions. So I have a couple companies where owner has to contribute capital on a regular basis because it hasn't hit that spot yet. I don't wanna buy something, I have to do that, for 3 months out of the year because we haven't built cash reserves or didn't buy it right with enough cash reserves to handle that.
I mean, if we would have, so let's just do some real quick math here. So
Mhm.
if we bought it for 1,650,000, 10% would be 165,000. And so let's just say 150 for conversations. That
Mhm.
way we can subtract. So if we would have financed, let's say 1.5 million,
Mhm.
so our principal and interest payments would be what? Let's just say 40% higher, like roughly.
Yeah.
So instead of it being 16,000 would be another, call it 7,000. So 23,000. I mean, if that was the case, if our payment was 23 grand a month right now, there would be more months than not than that we were cash flow negative. There's no doubt about it. Because don't get me wrong, we've had plenty of months where we lost 5, 10, $15,000. Now the company's profitable over the last 12 months of operations. We had a fine year, but there were plenty of months where our net income was negative. And gosh, if we had another $7 to $8,000 of debt payment per month, man, that would make things just significantly harder. Those months where you've got unexpected expenses that come up, which every single acquisition entrepreneur that you're going to bring on the show, 10 out of 10 of them are going to say, not only did I have unexpected expenses, but I had probably a significant amount of unexpected expenses. You pile that on top of of a debt service payment like that. And I mean, man, it can make things get hairy real quick.
But yeah, every business owner I've ever talked to that acquired something was either, something come up within the first weeks of their acquiring it that, wait a second, I wasn't expecting on this type of capital expenditure or key employee leaves, and now you gotta, the expense of sourcing another employee, that's expensive, especially if it's a, management level employee. You can spend upwards to, you know, tens of thousands, if not 100,000 on an executive search if you had to find another key operator or something. So,
Yep.
all this stuff has to be planned for and contingency plans and, at least have the thought process in your head of, "Well, what am I gonna do if?"
Yep. And to kind of cover that, like if you don't want to get super far into the weeds, like
Mhm,
in formula would be, okay, if it costs them $1 million to operate their business every year for the last 3 years, and they've been doing this for 20 years, I would just add 25%. Like in your projections for the first like 3 years, like it's gonna cost me 25% more to operate this business than they have. Like you'll probably be fine off of that. And luckily we made some of those assumptions. I mean, not was by design,
mhm.
but there was certainly just some dumb luck in there. Like for example, to maintain our vehicles and equipment, we 3x'd what it cost them to do it the last couple of years in our projection. And we actually undershot it. So it costs us more than 3 times what it cost them to maintain our vehicles and equipment because one, the owner was somewhat mechanically inclined, so he could do some stuff himself, which we cannot. And also, they were Band-Aid fixers. So instead of fixing something properly, they would Band-Aid fix it for a third the cost. And then, of course, we were picking up a lot of these pieces in our first year of operating. So
Yeah,
yeah.
you get that a lot. Talked to a manufacturing company a long time ago now, it was about a year ago, and I was like, I don't know what made me ask the question because he's talking about all these employees and talking about how good his equipment is. It's designed to be a lifetime equipment, big CNC. They made custom metal parts, right? So they had lathes and CNC cutting devices, and they could cut parts and gears, but they usually did low runs, probably 10 to 15 pieces because they were, or even single one-offs. If somebody quit manufacturing something, you could send him pictures of your broken part. They could 3D design it down to the perfect size, perfect gear, and recreate it. And so anyway, we were starting to talk and something in my head said, your equipment's 30 plus years old. You think it's made for a lifetime. Like you got some new equipment too, like the CNC stuff, but who does the maintenance on all this stuff? And he goes, I don't even need the manuals on all the equipment anymore. I know exactly where to bump which machine when it does X, Y, Z. And I started thinking, okay, I'm glad I asked the question now because guess what? I don't. And quite literally, I probably would put an operator, if what I was looking for is it was big enough, it could have probably pulled this off where I put an operator in there. I might go out for the first few months to get sales right, get to know everybody and stuff like that. But after that, I would probably move back wherever I was living and have an operator and just do Zoom calls weekly and eventually go out there once a quarter and meet with people and stuff as the owner. I wasn't going to be an on-site owner. And that takes a special company anyway. It has to be really well run. I don't recommend that for most people. I've just got a lot of experience doing things remotely. Let's talk about the backbone planning business of yours. What is it and how does it work? What do you guys do for those clients?
Yeah. So Backbone Planning Partners is we're a boutique wealth management firm that focuses on serving, the small business community and their families. So a typical firm like ours, usually like there's like this rule of thumb that's like one advisor can handle like 100 to 150 households. So we've got me and my partner as the advisors, then we've got some staff. We serve about 90 households.
Mhm.
So we've got like our legacy clients who are non-business owners. And then we've got all the clients that we've started working with, call it in the last 5 years,
Mhm.
who are pretty all entrepreneurs. And they range, most of the clients that we really, really enjoy working with and do our best work for are more type blue collar type businesses.
Mhm.
The doctors, and the attorneys, those are not generally going to be folks that we jive with, and we don't generally get hired by them. And so we stick to the people that we really like to work with. So we've got businesses in the construction related fields. We've got a whole bunch of manufacturing clients. We've certainly have white collar professional firms, but most of our clients, probably 70 to 80% of our clients, are blue collar type clients. And there's there's two things that we do. So one, we do all of their personal financial planning and wealth management, soup to nuts. So the investment management, retirement planning, estate planning, insurance planning, all of that. And we're pretty good at that. We love doing that. But where we really shine and where we really like to play is working alongside our business owner clients, helping them to just build better, more transferable businesses. The vast majority of our clients are not thinking about selling, this year or next, but they are definitely focused on some kind of a transaction 3 to 10 years out. And a lot of wealth management firms are kind of benchmarked on the assets, that they manage. And that's not how we benchmark ourselves. We kind of benchmark ourselves on the enterprise value that we help to steward and kind of shepherd and help, hopefully grow. And that's somewhere between about 350 and 500 million of like total enterprise value that we, from the clients that own the businesses that allow us to serve them. And so we do strategic planning for a small handful of clients. So think like EOS type small business operating system implementation and kind of ongoing management. So we do that. We do a decent amount of like executive compensation type work, so these small businesses have people that are just absolutely critical to their operations, and they want to make sure that their incentives are aligned with what the company is doing and what the owners ultimately want out of the company. So we do quite a bit of work in that space. And then we also just, we meet with our business owner clients generally either monthly or quarterly. So we're helping them to review contracts, review their financials, just understand what's going on in their industry and help them to just make better decisions. Like, for example, we have a client that's in the guided tour space. And so they needed to make a really big decision around, do we buy this fleet of vehicles, or do we continue to lease them? Like, what's the better solution here? So we looped in their tax professional and facilitated a bunch of conversations around what makes the most sense. And it's not necessarily that we have all the answers, because we don't, but what we're really good at is just bringing, folks together and facilitating good discussions so that we can find optimal outcomes for our clients. And that's generally what they are relying on us for. We also do quite a bit of advising around acquisitions. So our clients find a business that's for sale, or they get approached by a competitor and they're like, "Hey, Bob wants to sell me his business. He's been doing this for 25 years like me, but I don't really know what to do or where to start. Can you help me?" So we do quite a bit of advising around that. So it's a pretty broad, set of services that we offer our business owner clients, but that's really where we like to play and where we shine, is like working alongside our business owners, helping them to just make better decisions that ultimately help grow the value and increase the the likelihood that they can actually transfer the business to another party at some point in the future.
That's awesome. A lot of these small businesses, they were never taught the accounting, they were never taught financial management. I get more than probably 2 or 3, sometimes probably as many as 5 or 6 calls a month from people who see the word investor in small business in my title and wanna know if I'll, like, give them money to help their business grow. And often it's stuff like, you mentioned blue collar and stuff. Often it's construction and roofing companies, because the long pay cycle, right? Their complete
Mhm.
sell cycle, they have long account receivable periods because they're getting paid by insurance companies and or the end of the project and stuff. So they run into this problem where they have more work than they can they have the capital to fund, right? You think of a roofing company, he does a commercial roof, he had to put all the materials and labor out, and the insurance company takes 90 to 180 days to pay them, right? And he's got 2 more roofing jobs. Now he's gotta go out and pay labor on those jobs and, materials on those jobs, and you can talk tens of thousands, not $100,000 worth of material on a commercial roof, right? And then by the time you're 3 or 4 into these, you're like, "Okay, I'm out of cash. I can't do another job until one of these guys pay." And there's some very expensive financing mechanisms, but I can see with working with the guys like you and other people where they can, like, they get a foresight or a futuristic view of, "Okay, look, you're going at this rate. You're currently, keeping this amount of cash reserves. You can't continue to do that. You're gonna have to accumulate some cash here or you're gonna run into a problem." Business owners are business owners. They're there for a reason. They have a skill or a trade most of the time that got them to where they're at. But very, very in infrequently would be that they're financial advisors or they're financially astute in knowing that. And like I said, I'd say at least 5, 6 times a month, somebody will try to schedule a call, and they're wanting money to get them by until they get their next invoice paid. And, unfortunately, there's invoice factoring companies and stuff like that can do it, but they're extremely expensive. But, I avoid investing in stuff like that because in my mindset, they're expensive for a reason, right? The business model has told them they have to charge higher rates because some invoices don't pay or whatever the market's doing inside of there.
Yep. And a lot of small business owners that have experienced some level of success, they are beholden to their lifestyle,
Mhm.
right? So when their expenses are $10 to $20,000 a month, and that's what they're taking out of the business, it's not really an option to like build up cash in the business because they're stripping it of essentially all the extra cash because they've succumbed to a certain lifestyle, and changing that lifestyle, that's like option like 7 out of 10. No, they don't want it. They can't do that necessarily
Yeah.
because lifestyle creep is a very, very real thing. It happens with, essentially all of us to some degree. And so, building up the cash reserves means that you got to take less cash out of the business, Mr. or Mrs. Business owner. And it's like, oh, well, no, that's not an option right now because they literally can't, because their mortgage and their private school payments and their car payments and all this stuff, like again, they're beholden to this lifestyle in order to continue to pay their bills and live the same lifestyle that they're used to. It's not an option that they really want to consider unless it's like absolutely the last, you know, do or die option.
I get it. A lot of people ask me all the time, like, "Why do you drive an old beater of a car? And why don't you live in a big extravagant house?" I said, "'Cause I pay cash for my cars. I pay cash for my houses. I don't have a mortgage. I don't have payments." And the freedom that gives me in all kinds of things is if I get when I have a company that needs to accumulate cash, it's okay for it to accumulate cash. If I need to bootstrap an idea, right? It's okay for it to bootstrap an idea. I'm not having to pull money out of it. I'm not needing money so bad I'm pulling it out of things that technically need it worse than I do, right? A lot of those business owners don't realize the life of their business needs that more money, needs that money worse than their personal life needs it, right? They could have a smaller house, they could have an older car, and their business really needs that money to survive, grow, and thrive. But each person has their own decisions and their own businesses. I've seen businesses, a guy come up to me, try to sell a business, and he's like, "Oh, it's not making enough money." And the guy's driving a $200,000 one of those little, I don't even realize why they're so expensive, but those little Mercedes Jeep looking things, those things are outrageous, right? Driving one of those, his wife is a trophy wife. I'm not going to be mean. If he hears me, I'm sorry. It's exactly what she is. She's a retired model. They live in a $2.5 million house, and their business cannot support everything. You strip all that away, where he's trying to pay himself $25,000 a month to cover his household goods, and you put a guy in like me that I don't need to draw from that business for the first 6 or 8 months it's running. I could let it build up to $25,000 a month. Actually, he's pulling 32,000 some months. That's a significant you know,
Mhm.
that adds up over the year, right?
People people think like they're gonna get this kind of advice like from their CPA. It's not the case. Like in order to get comprehensive like advice, like forward looking advice, like you got to be working with somebody that has like the full picture of your personal and your business situation. Here's a great example. We got referred client who owns a pretty successful business out in Las Vegas by their CPA. And we got referred over to them right after they made a $400,000 distribution from the business so that they could pay off their house. And this was the advice from the CPA. And so they get referred over to us, and it was literally like 30 days after they had done this. And we met with him. He did end up hiring us, and it just about bankrupted the business.
That just
It
doesn't rationally sit with me. If you think about when money's sitting in a business, it's like a stock or an investment. It should be getting some rate of return, right? If you've got money in a minute business, you can use it to deploy and grow. And they say your business is doing, I don't know, it'd be nice, say 10% profit margin. If you bought your house in the last 5, 6 years and you're wanting to pay it off, there's a good chance you have a 5% or 6% or less mortgage. So why would you take something that's paying 10% profits minimum and stress it out by putting the money at something that's only costing 6%? You know, it's just logically, I guess I'm hyper logical in the sense that just doesn't make sense in my mind as to, yeah, you just killed off let's say $1,000 or $2,000 a month or $3,000 a month mortgage payment. But, the opportunity cost of the money sitting in the business if properly deployed, what was that? What would it earn?
it was funny because shortly after they did that, the business was took a little bit of a downward turn, and they had to leverage their investments to do an asset-backed line of credit to infuse money into the business to keep it afloat. And that was at a 8 or 9% interest rate. And at the time when they bought their house, rates were at an all-time low. So their mortgage was like 3%. And it was just one of the worst decisions I've ever seen. And it was solely because you weren't looking out 3 to 12 to 24 months into the business going, well, gosh, like, what if we run into a hard time or the economy takes a dump or they slap some new legislation on our industry and it costs us $100,000 to be compliant? Like, you just, you're looking through the rear view mirror, you're not looking out through the windshield. And so people just make decisions that are they're
Yeah.
just reactionary.
We've had situations where we had, like, a car for a while there, and the interest rate on the car was so cheap, and, because it was, like, one of those like, the dealers had a special where 0% for the first 24 months and then 2%, like, they were just trying to get rid of cars, and somebody says, "Why do you still have a car payment? Why don't you get rid of it?" 'Cause deploying the same amount of capital in a bad investment on the open market pays I could right now, I could put it in the money market and make more money than I would by paying off that payment. People don't look at that stuff, they just think, "Oh, I don't want the payment anymore," and you're like, "Well, you're losing money by paying that off." So, I have a friend where he got an inheritance, and we had the same discussion. He was like, "I'm gonna pay off all my bills." I was like, "I thought you told me you had a 0% interest loan on that expensive SUV you bought your wife." He goes, "Yeah, it's like 0%. It converts to 1.5% next month." They gave him some incredible deal. He's excellent credit. I said, "You're gonna pay off a $50,000 car loan on money that's gonna charge you 1%, and then you can put that in a money market." I said, "Where's it at right now?" He says he's in a Robinhood money market account. I said, "What is it paying?" I was like, "It was 4.5, 5%." It was something like, close to 5%. I was like, "Why would you lose?" I did the math for him. I was like, "So many $100 per year, right? Why would you give, like, give it I'll give you some free, I'll give you some cheap advice. Give me half what you would lose, and I'll tell you not to do that."
There you
Right?
go.
There's opportunity cost for everything, and a lot of people don't realize that. So having somebody like you that has that mindset for a business owner to like, "Okay, what's the best play here? I've got capital coming in, I've got money going out. I want to retire in 10 years. How do I get there best? Have somebody to look at that and look at the numbers, both your personal life and your business, and have somebody have that mindset and have that knowledge is incredibly an intelligent play for these guys. So it's cool that you're doing that. I don't know. I've interviewed a couple financial advisors on here, mostly like tax strategies on exits and stuff, but nobody
Yeah.
that would sit down and go, look, I'm going to look at the whole picture and figure out how we maximize your dreams and get the most out of the business and make sure you can retire. That's a different strategy. So it's cool. How do people reach
Yeah.
out to you? What's the best way that people can reach out and talk to you? Either like sell you a tree service or sell you a business related to trees, or hey, help me run my business. I'm in Vegas, or do you guys do that anywhere? Is it have to be in the local market for your backbone planning, or is that
Yep.
local?
So we've got clients from Southern California to the coast of North Carolina, and I think 15 or 16 states in between. So yeah, we're essentially a fully remote firm, so we can work with clients all over the country, and we do.
Okay,
LinkedIn's a great spot. So Landon Mance, you can find me on LinkedIn. Dad to twins. That's the first line of my headline. So you can't miss me. I'm pretty active on LinkedIn.
cool.
And backboneplanning.com. That's our website. If you want to land there, we got some good resources for business owners there as well. So I'm pretty easy to track down.
Okay, and then the famous way I like to wrap this up is I always ask the same question. If somebody can only remember one or two things from this, maybe three, what would you want the takeaways to be? What would you want the people listening today to take away from our show?
Yeah. Man, I love that question. All right. So I'll take two shots at this. I'll go business and personal. Business side for people that are looking to acquire a business. Obviously, do you go by Ron or Ronald? I
Either
never asked that.
Ron's fine.
Ron. Okay. So Ron, as you know, as well as anybody, acquisition entrepreneurship has become a much bigger thing
Hmm.
for the last few years. And I think finding someone like yourself that can help shepherd people through that journey, I think there is just immense value in that. So anybody that's looking to buy like their first business, having somebody that can help shepherd you through that, to look at deals, to arrange the financing and the investors, and to, again, look out through the windshield, not just like what's happened in the business, but like what could potentially happen in the future. I think that's immensely valuable. So I'd consider anybody looking to buy a business to think about partnering with somebody like that. And then also, there is just incredible opportunity in buying small main street businesses. And again, everybody might ask 10 people, you might get 10 different definitions. But to me, a main street business is like a business that's doing $1 to $10 million a year in annual sales. And there are so many incredible opportunities out there to find an owner to to be that legacy for them, to just continue on with the great work that they've been doing for 10 or 20 or 30 years. And so I love entrepreneurship. I love the idea of entrepreneurship via an acquisition as opposed to starting something. I don't think I'll ever start something again in my life. No interest in ever doing that. Yeah. And then on the personal side, I would just say that human connection is just such an important part of being a good human and being a good business person. So I'm trying to make an effort to spend more time with people face to face. And I'm going to make it a goal of mine in 2025, where if I find somebody that I really want to like get to know and connect with for whatever reason, and maybe that's only 3 to 5 people next year, but I'm going to make an effort to go out and actually see them. So whether they're local or whether they're in another state, I'm going to make an effort to get on an airplane and go out and connect with some people and spend a half a day or a day with them and understand more about them and what's important to them, and learn more about themselves and their families and their faith and all the things that are important to people, because that's what really gets me out of bed in the morning. Like, I love business as much as anybody does, but I also I love people and I love connecting with people. And so that's what helps me. That's what drives me. And that's what helps me become a better person, is learning from others.
One more thing before we go. You mentioned a couple of times about your podcast. What is it called and how do they find it?
The podcast is called Tycoons of Small Biz, BIZ. So you search for that on Google or on Apple or wherever you look at your podcasts, will pop up right away.
Awesome. Well, thank you for being on the show, and hang out for just a minute afterwards, and we'll call that a show.
Yeah, right on, brother. Thanks for having me on. Appreciate you.
I want to announce our new channel partners, the ITX Marketplace. Since 1998, ITX has created $5 billion in value by selling more than 225 IT businesses in 20 countries. ITX works exclusively with IT-enabled businesses generating between 5 million and 30 million who are ready to be sold, and M&A decision makers who are ready to buy. For over 25 years, ITX has developed industry knowledge that helps determine whether a seller is a good fit for their buyers before making the match. ITX Mergers and Acquisition Marketplace we have partnered with has a proprietary database of 50,000 plus global buyers seeking IT service firms, managed service providers, Microsoft service providers, software as a service platforms, and channel partners with Microsoft, Oracle, ServiceNow, and the Salesforce space. If you have an IT-enabled business you're ready to sell, I want you to visit the itexchangenet.com/marketplace, how to exit. That link will be in the show notes. Visit them now.